Good morning, everybody, and this is your S&P 500 setups for today. So, yeah, we're still pretty much playing in this area of weekly support, and a good example of why you don't really want to get involved when you are at such strong levels that could offer support. So, just to recap on the weekly, you can see this level to the downside here is something you need to pay attention to, and that's at 41.43. So, often trying to jump in short here because you're listening to the noise in the market, which is screaming doom and gloom, you tend to get burnt. So that's one of the big reasons why I ignore the noise, look at the levels. If a level is as strong as it is here, just sit back and watch the fireworks. Right, so what did we have yesterday? Tail to the upside, tail to the downside. A big pin bar here. I don't like the way the body is. It's more of a range bar, an extended range bar in my eyes. But the important thing here is we have a potential double bottom on the oscillators, which is almost as good as diversions. Not as good, but almost, with price making a lower low. So at the moment, granted, trend is to the downside. And remember, we had this strong move down, we had this flag break, and I said to you, you're probably going to be held up in this area, and that's exactly what is going on right now. So moving across to the 3 hour, nothing has really changed. You can just see big up, big down, no diversions here. I suppose you could argue between that and that swing low is diversions, but I'd want to see a fractal here, and I don't think, oh, we do have one. Okay, so I stand corrected. That is diversions. Could be a double bottom brewing, but I'd want to see us get above 41.81 before I even consider that. So you can see on the 3 hour, trend is really strong to the downside. We're in a weekly zone of what could be support. So everything hinges on how we close today. We closed below this 41.43 today, and not just below. I want to see us close here in the 4100, 4125 area. That is going to be the validation. Then you'll be looking for shorts off this area. But don't forget to smash that like button before we get into any potential trades for today. Yesterday, as expected, up and down, chaotic, not something that I wanted to be trading. So nothing really that we can see there on the hour. Those two levels are still very much in play, and I suspect the 50-minute is not going to be much better. So we are in a downward trend below the 155, 150 EMA rather, sorry, and there was an opportunity for a short up here, as we suggested. So, this is so typical what price does. People are waiting for the gap, but the ambush has come in here at the closest level, which is normally these sort of fractals that are here. So whenever you see fractals being formed with a gap above it, that's typically where price gets taken to, or where the sellers come in, specifically in this kind of setup. As you can see, one move down, find support here, bounce back up, second attempt, and then down to try and take this level. Yes, we've closed below it, but we've pretty much closed below it on the daily, but take it with a pinch of salt at the moment. It's a weekly level, so you want to see a weekly close below it. For me today, reluctant for shorts still, really not going to be chasing shorts going into the close of the week. Don't see any wise decisions there. And for the longs, 41.81 would have to go. We've got a gap here, so I'd want to see a fairly strong break and a move back to come and test this. Problem is that's like half a point or 0.63% move in price at the moment. So we're very volatile. A couple more earnings still to go, which after that we should start seeing something happen. Just too much noise, guys. Way too much noise. We still got the chaos in the Middle East at the moment. You've got the chaos in Ukraine, which is all of a sudden just gone quiet. Now there's no war in the Ukraine. It's only in the Middle East. And the scary thing is this is all manufactured by human beings. But anyway, we're going to have to wait to see what is coming out. From a cycle perspective, October is still an area where buyers tend to start seeing value going into the Christmas rush. So that is still there. Earnings that are coming through are not all doom and gloom. A lot of the data coming through is not all doom and gloom. The VIX, for those of you who follow the VIX, is also not all doom and gloom. The only thing that is kind of a concern is the 10-year bond rate. So, but you know, that's something that the Feds can fix. So it all depends what the Feds start talking about now. So if we do start crashing through these weekly levels, then the fear of recession becomes real, and then it is going to be probably well into next year another quite a long short run. But if you look at this on the higher time frame, being the weekly, this is currently a pretty healthy pullback to come and test support of come test the break of what was strong resistance and try and flip it into support. So I would expect us to bounce around here. I really don't expect us to fall to the floor, especially now with oscillators looking like they are now, and how the moving averages are as well. So patience is key. Definitely not looking to chase shorts, and I'm definitely not looking to go long at the moment, not until we get proper structure above here. And you can see there's another weekly level, which is that weekly pin bar right there. And if you come back to the 15 minutes here, you see how we did try find support there day before yesterday, and then we did reject that weekly level as well. So that is also another area you need to pay attention. That's a round number as well, which is 4,200. So anyway, that's kind of my view. I think it's sit on hands, guys. I'm not really keen on this. I don't see any reason to be jumping in while we're bouncing around sideways like this. Just going to get you frustrated and more than likely losing money. Hope that helps, and we'll catch up with you on Monday morning. Enjoy your weekend.